Isn't it kind of surprising how sometimes the biggest market shifts, well, they happen almost silently. You see a price just ticking along, but underneath, there's this whole hidden current, like money flowing in or out.
Uh-huh. It's like there's a whole story happening below the surface.
Exactly. So today we're diving into a really fascinating tool that tries to make that hidden flow visible. It's called the Money Flow Index, or MFI.
That's right. And for you listening, we've got a great resource to dig into this. It's a transcript from Parashar of Learn and Invest. He actually shares some really valuable stuff from his trading course on YouTube.
Yeah, so think of this as like getting a sneak peek, a shortcut to understanding a pretty insightful market indicator. Our goal today is pretty straightforward. We want to demystify this money flow index, look at how it connects with the RSI, that's the relative strength index, which many of you probably know.
Right, the more common one.
Yeah, and ultimately figure out how these indicators, maybe together, can potentially give you, a leading perspective on where the market might be headed.
The idea is to spot those potential turning points.
Yeah.
Maybe before everyone else does.
Right. We want to equip you with the knowledge to see those shifts before they become old news.
Okay, so let's jump right in then. Fundamentally, what is this money flow index?
Okay, let's break it down. MFI, it stands for Money Flow Index. And essentially, it's an index like RSI. It moves on a scale 0 to 100. And it's designed to reflect the flow of money. Is it coming into an asset or heading out?
And what's really interesting here, the crucial bit, is the core difference between MFI and RSI. Now, lots of traders use RSI, right?
Yeah, it's very popular.
It focuses on the speed, the magnitude of recent price changes. But MFI, well, it takes this extra step. It actually pulls in volume data into its calculation.
Ah, okay, so volume is the key differentiator.
That inclusion of volume, yeah, it's a really critical distinction. It's what makes it pick differently.
Absolutely. And just like RSI has its levels, people watch usually around 70 for overbought, 30 for oversold.
The standard ones.
MFI has its own typical thresholds. Generally, people look at 80 as potentially overbought and down at 20 as potentially oversold. So different numbers to keep in mind.
Okay, 80 and 20 for MFI. Got it. This actually leads us nicely into a really foundational concept in technical analysis. The difference between leading and lagging indicators.
Right. Okay. So lagging indicators, you might have heard of things like MESCD, moving average convergence divergence.
Yeah, or stochastic RSI, maybe?
Right, those kinds. They essentially give you a signal after the price has already made its move. They're kind of confirming what just happened.
They lag behind the price action, hence the name. Useful for confirmation, but maybe not for getting in early.
Exactly. But leading indicators, well, they attempt to signal potential future price movements. And this is where MFI often gets categorized.
Because it includes volume.
Precisely. Because it factors in volume, the thinking is it can potentially flag upcoming shifts in the market before they're fully baked into the price.
And that's the holy grail, isn't it? Trying to anticipate what's next, not just react to what's already happened.
That's the goal, yeah. So let's dig a bit deeper into why adding volume makes such a difference for MFI.
Well, the main reason MFI is often seen as a leading indicator, according to Anil Parashar in our source material, is exactly that integration of volume. You still see that line wiggling between 0 and 100, like RSI. But the peaks and troughs in MFI, they arguably carry more weight because they reflect the intensity, the volume of buying or selling pressure.
Okay, so think of it like this. If you see a sudden big jump in trading volume, whether it's buying or selling, that could be an early clue, right? Like something significant might be brewing under the surface.
Yeah, like the big institutional players may be moving in or out. They can leave these volume footprints before the price fully catches up sometimes.
Makes sense. Now, there is an important practical point here. The source material, Learn and Invest, points out a challenge specifically for real-time volume data on major Indian indices like Bank Nifty and Nifty.
Right. For retail traders during market hours, getting that reliable real-time volume feed for the index itself can be tricky.
But, and this is key, this volume data is generally available on charts for individual stocks.
Exactly. So while maybe using MFI directly on, say, a Nifty futures chart in real time has limitations due to the volume data availability, it can be a really insightful tool for analyzing individual company stocks where you can see that volume information clearly.
Okay, so more useful for stocks than indices in that real-time sense, potentially?
Generally, yeah, based on data accessibility for retail. And this brings us to a really crucial part of using MFI. understanding what those spikes in the indicator mean.
Yes, the source really hammers this point home. With volume-based indicators like MFI, those sharp moves up or down the spikes, you really need to pay attention to
Well,
them.
okay, so what are we looking for?
Well, here's where it gets interesting. Imagine a stock, right? The MFI suddenly shoots way up, indicating a big surge in buying volume.
Okay.
But the price itself doesn't immediately rocket higher. It just kind of churns, maybe moves up a little bit.
Oh. So lots of buying, but the price isn't reflecting it yet.
Exactly. And what that kind of divergence might suggest, according to the source, is that large players are quietly accumulating shares. They're buying, but maybe trying not to push the price up too fast while they build their position.
Ah, stealth buying.
Kind of.
Yeah.
And this could be a strong early signal of a potential upward move coming down the line, once that buying pressure really takes hold.
Okay, that makes sense. And the opposite.
Conversely, yeah, if you see a sharp downward spike in the MFI showing heavy selling volume while the price is just sort of drifting sideways or maybe even slightly up,
Mm-hmm.
that could indicate the big players are quietly getting out, liquidating their positions, and that selling pressure is likely to eventually push the price down.
So MFI spikes, especially when they diverge from immediate price action, can be really telling.
Potentially, yes. And to make this concrete, the source uses Bajaj Finance as an example on the chart.
Okay, what did they see there?
Right. They pointed out times where Bajaj Finance saw an upward price move, but at the same time, the MFI actually peaked and started heading down.
So price up, MFI down.
Yeah. Suggesting that even as the price nudged higher, the actual buying volume, the force behind it, was maybe fading. That divergence could have been a signal, like, hey, maybe time to think about getting out before it pulls back.
Interesting. Like the move was running out of steam, volume-wise.
Exactly. Then there were other times where the MFI showed these big upward spikes indicating strong buying interest.
No.
But the price just stayed stuck in a range, didn't really go anywhere immediately.
Right, which reinforces that idea of MFI potentially leading the price. The buying is happening before the breakout.
Precisely. It highlights that leading potential. And of course, they also showed examples of downward MFI spikes, signaling lots of volume leaving the stock before the price eventually took a tumble.
So it's about spotting those early volume clues that MFI can give you.
That's the idea. Now, this is where we can get even more, maybe, strategic with our analysis by actually combining the MFI with the RSI.
Okay, using them together, how does that work? What's the strategy there?
Well, the source suggests that looking at both MFI and RSI at the same time can give you potentially stronger signals. The key thing to look for is when both indicators move into their respective extreme zones simultaneously. So both overbought or both oversold at the same time.
Ah, okay. So not just one or the other, but when they agree.
Exactly. When you see that kind of convergence, that agreement, it could significantly increase the probability that a price reversal might be coming.
So, for example, if both MFI and RSI are down in their oversold zone, say below 20 for MFI and below 30 for RSI in a 30-minute chart, that might be a much more compelling signal for a potential bounce upwards than if only one of them was showing oversold.
Precisely. The source even mentioned a specific instance where both indicators dipped into oversold on a 30-minute chart, possibly hinting at an upcoming upward move.
Okay.
But they also added a smart caution. If the stock, like Bajaj Finance in their example, is just stuck trading sideways in a range, even with these oversold signals, it's generally wise to wait. Wait for some confirmation that the price is actually starting to move in the expected direction before jumping in.
Makes perfect sense. Don't want to anticipate a bounce that doesn't happen just because the indicators look oversold in a sideways market.
Right. Context matters. What else can combining them tell us?
Well, the source also brought up past examples. Times when the RSI hit its overbought zone in Bajaj Finance, coinciding with major price peaks.
Okay.
And crucially, this was often backed up by a falling MFI. So RSI saying overbought, MFI showing money flowing out.
Ah, double confirmation for a potential top.
Exactly. That dual signal really strengthens the case for caution or a potential short position.
And what about the more recent picture they mentioned?
At the time of the recording, they pointed to a scenario suggesting potential downward pressure in Bajaj Finance, based specifically on the MFI, indicating an outflow of volume, even if RSI wasn't maybe screaming overbought yet.
So using MFI's volume insight as perhaps an even earlier warning signal in that case.
Potentially, yes. It's a real-time illustration of applying these ideas.
Fascinating stuff. Okay, let's shift gears slightly. How does MFI fit in with breakout trading? People trying to trade when a stock breaks through a key level.
Yeah, this is a pretty logical application, actually. Since MFI is about volume and force, Its principles line up well with trying to gauge the strength of a breakout.
So let's say you're watching a stock on a daily chart and it's bumping up against a big resistance level. How could MFI help there? Could it give you more confidence that if it breaks through, it's likely a real move and not just a fake out?
That's the idea. You'd watch the MFI's behavior as the price approaches and potentially breaks that level. Is the MFI rising strongly with the price breakout? That suggests strong volume commitment, more likely to be sustained.
Okay.
The source specifically mentioned Bajaj Finance potentially being in a triangle chart pattern, setting up for a breakout either up or down.
Right.
And they suggested that watching the MFI right at that critical breakout point could offer valuable confirmation about which direction was more likely and how strong that move might be.
Did they give a time frame to look back at?
Yeah, they actually suggested checking the Bajaj Finance chart around July 23rd, either 2022 or 2023, depending on when you watch the original video, to see how a breakout might have unfolded and what the MFI did then.
Oh, that's cool. A practical exercise for you listening to go back and see it in action.
Absolutely. It encourages actually looking at the charts and seeing how these things play out.
Okay, wow. We've definitely covered a lot of ground here. Let's try and boil this down. What are the key takeaways we really want you to remember from this deep dive?
Okay, first I'd say, remember MFI is a volume-based leading indicator. That volume component is its core difference and its potential strength for giving early signals.
Got it. Volume is key.
Second, pay really close attention to those MFI spikes, especially when they diverge from what the price is doing immediately. That divergence can be super informative.
Right. Spikes and divergences.
And finally, think about the extra confirmation you might get by combining MFI with RSI. When both indicators are signaling an extreme condition overbought or oversold at the same time, the probability of a genuine reversal can be significantly higher.
MFI plus RSI agreement equals stronger signal.
Basically, yeah. Ultimately, the MFI is a tool designed to help you anticipate where the market might go by trying to track where the significant money flow seems to be heading.
Okay. So here's a final thought, something for you to maybe mull over. How might really incorporating this kind of volume-based analysis using leading indicators like MFI actually shift the way you look at market movements?
Could it potentially give you a bit of an edge? Help you spot opportunities or risks before they become obvious to everyone else looking only at price?
Yeah, maybe try this. Pull up some stock charts you follow, add the MFI and the RSI indicators, just watch them for a while. Look for those moments when they agree, when they diverge, especially around key price levels or potential breakouts.
See if you can start to recognize those, maybe subtle early clues about potential shifts. It might just add a valuable dimension to your analysis.